Well, shares of Delta Airlines are under pressure after the company made a profit growth forecast that fell short of Wall Street estimates. These shares are trading lower now, despite Delta's CEO saying that robust travel demand, especially at the high end of the market, could boost the company's shares to a record high. They're down right now. You can see 1.9%. For more on this, let's bring in Stephen Trent, independent aviation specialist. Stephen, thanks as always for joining us.
Thank you for having me.
What number is the most concerning to you on what we're seeing in the report?
Yeah, look, I don't think any specific red flag came out of this. I think with the guidance for 2026, they were in the lower end, let's say, to some degree, calling out economic uncertainty. But I would say from a broader industry perspective, the lower end of the totem pole, U.S. consumer would be the place to watch. How does main cabin develop? Do we see some of the M&A out there coming through to fruition? If we happen to get this 10% cap on credit card interest rates, that's something that ostensibly would be worse for the lower end consumer versus wealthier consumers at Delta, American, or United Airlines. So maybe that would, from an industry perspective, be the place to watch.
Okay, for Delta, with the main cabins, how important is it that they are full as opposed to first and business?
Yeah, so Delta derives the majority of its revenue from outside the main cabin. So far more important what we're seeing on international first business class and the loyalty and co-branded card. Main cabin wise, can these businesses, let's say in basic economy, withstand relatively low yields? Absolutely they can, because it's a very small number of seats. So I don't think it's particularly a big problem for the big three. Mm-hmm. I'd actually still be worrying more about the lower end of the market on the ultra low cost carrier side of the fence.
And who are some of those that people should be paying attention to, do you think?
Well, definitely in that segment, Spirit Airlines front and center. They've certainly had challenges with respect to the latest Chapter 11 filing. Maybe they don't merge. But if you look at not just Spirit, the ULCCs generally, everyone is trying to be more like Delta, American, United, talking business class cabins. Some carriers out there trying to launch more international. They're trying to launch premium lounges at airports. So there is, I would say, clearly a move away from that model because it's not making money.
Could we see some, you're talking about mergers and acquisitions, could we see some of maybe the big three picking up one of the lower cost ones?
So that in itself might be a little bit challenging for the big three, not only because of business model differences, but also because of their pretty large scale as it is in the domestic market. But certainly, you've seen the on again, off again. Frontier looks like it's out there. According to Spirit Airlines, there was some news, of course, coming from Allegiant and Sun Country, for example. You could even carry this more broadly in North America, south of the border. Volaris and Viva Aerobus in Mexico may be doing the same. So I think if there's M&A in the space, it's going to be outside of the network airlines.
Would Canada play in that at all? A company like WestJet, something like that?
Never say never. I think once you start to get into potential international cross-border type transactions, it gets a bit more complex. But I would say it's certainly the one very dominant network carrier in Canada, all else equal, would have at least some of the same challenges in going after a big acquisition on its own, for example.
Okay, and then the other one you mentioned about the credit cards with President Trump saying he wants to put that 10% cap on for the year. It likely won't go through, but what would happen if it did?
Yeah, great question. So I think that is a huge if. I think there seem to be a lot of steps that would have to occur for that thing to go through here. But let's say that it did. All else equal, I'm kind of putting on my banking hat there, but I think there's a possibility that lower end consumers would have trouble getting credit. Maybe some of these people would have to go to riskier areas of the market to try and obtain credit, potentially at higher rates, more onerous requirements on loans and that sort of thing. All else equal, wealthier consumers may or may not be as much as an issue, might not be much of an issue. And if you look at the U.S. Big Three, Delta, American, United Airlines, their co-branded card holders are in that wealthier segment that probably are going to be, relatively insulated from this, assuming that it even happens, which I would say is a huge if at this very, very early stage.
And just bringing it back to Delta, one of the things mentioned by the CEO, I believe it was the CEO that made, specifically on some of the travelers, Canada and China were having an impact on the bottom line. Just how much of an effect, or have you seen how much of an effect they are having on that?
Yeah, look, I think that is an important topic when we move forward. If you look at the U.S. Big Three international flow, 80%, 80 some odd percent of it is U.S. originating, but there's still a meaningful portion of that flow that comes from outside the United States. So if one does look at what kind of risk we have in, let's say, the possibility that inbound international travel gets worse, that's absolutely something to watch. And of the Big Three, United Airlines has the highest international exposure. Delta in the middle, American Airlines of the trio has the lowest level of international. Absolutely, it's something to watch. And I would say, certainly the Chinese traffic flow may be a little less concerning just because we're still way off pre-pandemic levels and probably not a huge expectation for that to come back to pre-pandemic levels. The Canadian flow is a different story.
Okay, we'll have to wrap it up there, but Stephen, thanks as always for joining us. Appreciate it.
My pleasure.
Stephen Trent is an independent aviation specialist.